Hello and welcome to our daily earnings season special, first of the week. And well, the US market is closed today, of course, Martin Luther King Day. It's a federal holiday in the US. That means markets are closed, so no companies reporting over in the US. But tomorrow morning we do have Netflix, which is one of the most popular shares traded on our platform. So preview of that coming up now. We have, of course, off the back of Q3 numbers, seen a pretty decent rally for Netflix, up over 30% since September, and in fact since over the last couple of months it's actually outperformed the wider market, but we're yet to see it really hit those highs that we saw in 2018, and even the 2019 highs are beyond reach at present time. So we're looking for these Q4 numbers to really either confirm that the profitability is not as sort of inconsistent as it has been, and also key thing to look out for are the subscriber net additions. That's seen I think around seen at 7.6 million net adds. Last time out we missed in Q3, they missed subscriber net adds were down on expectations. So the trend of subscriber net additions is the problem. The weakening there is seen as a potential weight on the shares. In fact, Needham analysts warning that they could lose up to 10 million subscribers over the coming years, simply because of pricing, and they think that they need to cut prices to consumers in order to keep subscriber additions going. And of course that comes chiefly because of fresh competition. This Q4 number will be the first time that we've seen Netflix really go head to head with anyone, as in November we had the launch of the Disney streaming service and the new Apple streaming service. Coming up this spring, there's NBC Universal and HBO Max as well being launched. So the whole plethora of new streaming services which are offering competition. Now coming up, so off the back of Q3, revenues were up 31% in Q3 to 5.25 billion. Operating margins rose to 18.7%. But they are now seen down at 8.7% in Q4. That is a lumpy number that moves around because of the cost of spending on content and the cost of marketing, and the timing of these spending decisions has a big impact on the quarter-to-quarter numbers. So we might look through these margin numbers, but the expectation is 8.7%. EPS came in at $1.47 against $1.04 expected. So that again, but that reflects that lumpiness of the margins. Subscriber trends are probably the more important thing. They are less lumpy and therefore better guide for the longer term health of the business. Year-to-date net adds through to the end of Q3 stood at 2.1 million, but that was against 4.1 million over the same period in 2018, and it began losing customers in the US for the first time since 2011 in the second quarter of 2019. So the trend is not great on subscriber adds, particularly in the US. The rest of the world is still going quite strong though. As I say, we're looking at the competition element coming up in these numbers. Also keep an eye on, for example, the Oscar nominations. There were 24 Oscar nominations, but we're yet to see whether that actually translates into better earnings, higher multiples, and so on. JP Morgan recently released a bullish note on the stock. You can catch the latest analyst updates here in the insights section of the asset, where you can go into the tools section and find the latest analyst changes that have happened for all the stocks on the all the US stocks in that tool section, as I say. So JP Morgan bullish note, 7.7 million ads. That's against 7.6 million ads expected. EPS of 56 cents. The consensus is a 50-cent earnings per share number. JP Morgan also bullish long term because of deeper penetration in terms of the broadband penetration in Asia Pacific and in Latin America. As more and more households get broadband, they'll be more likely to consume Netflix. So Q4 guidance, EPS 50 cents a share, revenue of 5.45 billion, US net subscriber adds at 600,000 and international ads at 7 million. So that's Netflix reporting tomorrow. As I say, we've got all the latest updates and analyst tools and so on the platform. Otherwise, today we did see some numbers from Fevertree, which were weaker than expected, decline in UK sales, which is a worry, of course, because that's where the bulk of the earnings come from. But we saw very strong growth in the US and the rest of the world, and that's where the growth is going to come from. I think these numbers reflect the fact that timing-wise, the bulk of their profits are coming from the UK, but the bulk of the investment is in the US. So it's a tough little patch for Fevertree, but I think that US growth will only continue to pick up. So we need to look at that longer term. Otherwise, that's it for the daily earnings season special. As I say, Netflix tomorrow, and check your calendars for all the upcoming reports coming in the next few days. IBM, Intel, Microsoft, among others. That's it for now. Thanks for watching.